In today's video, I'll be breaking down everything you need to know about the war in Iran and how it will affect the markets in the future. First, let's just do a recap. Just 4 weeks ago, on February 28, 2026, the United States and Israel launched Operation Epic Fury, a massive coordinated strike campaign against Iran. What happened was started as targeted hits on military sites, missile defenses, and leadership has escalated into a full-blown regional war that's now choking the world's most critical energy artery, the Strait of Hormuz. Oil prices have gone parabolic, global stocks are reeling, inflation fears are back with a vengeance. Today I'm breaking down everything you need to know about the war, the timeline, the mechanics, the market impacts, and exactly how you should be positioning your portfolio right now. So yeah, let's just get into a little bit more background. Tensions between Israel, the U.S., and Iran have been simmering for years over Iran's nuclear program, proxy militias like Hezbollah, and attacks on shipping. But the trigger came fast. On February 27-28th, President Trump greenlit Operation Epic Fury. In just the first 12 hours, nearly 900 strikes hammered Iranian air defenses, missile sites, nuclear facilities, and key leadership targets. Supreme Leader Ayatollah Khamenei, I'm pronouncing that right, was killed in the opening fight, and Iran quickly named his son as successor. Other senior officials, including Ali Larijani, were later eliminated. Iran didn't just take this, though. They hit back hard. Missiles and drones targeting U.S. and allied assets across the region, plus strikes on Gulf states. Hezbollah joined in with rockets into Israel, and the war is now in its fourth week, with civilian casualties mounting and environmental damage from bombed oil depots creating black rain over Tehran. Now, let's talk about the effects on the markets. Here's the simple truth. Energy is the lifeblood of the global economy. Disrupt 20% of oil supply and everything ripples. Oil prices exploded, Brent crude shot past 114 briefly, WTI over 100, and as of March 2025, Brent has been hovering near 98 to 112, up dramatically from pre-war levels, and U.S. gas prices have jumped 34% in some areas. If the Strait stays blocked even a few more weeks, analysts warned Brent could test 130 or higher in a worst-case scenario. That's rocket fuel for U.S. inflation and a brake on growth. Now, to highlight some of its effects, global stocks have been down 5.5% on average. U.S. indices held up better than the rest of the world, and the U.S. exceptionalism trade is still alive, mainly because America is less exposed to Iran's energy imports. Asian markets have got crushed the hardest, and Europe slid on energy dependence. The winners of this have been oil majors, energy ETFs, and defense stocks, and losers have been airlines, industrials, consumer staples, real estate, and anything interest rate sensitive. So let's take a look at what happened on the charts. As you can see, ever since February 28th, which was on that Monday, was when the news first broke out. The S&P 500 has dropped over 6%, which is a massive fall, and QQQ has fallen even worse, going down about. Oh no, so they're about the same. They've both gone down about 6%, while XLE, which is the Street Energy Select Sector ETF, has just gone parabolic. And it didn't even start. It started on December, but ever since the war on the 28th, it has risen 15%. And as global tensions increased, it has increased over 40%, which is absolutely crazy. And even though, and while the energy sector has been outperforming like crazy, literally everything else has been down. Financials, healthcare, consumer staples, utilities, industrials. So literally, and materials. So literally everything except for energy has taken a hit. But, the defense sector also has taken a surprise hit over the past few weeks because of the tension which was likely baked in. And as you can see, some growth stocks have still fallen. This is Katos, which is a defense company that has fallen. And if we take a look at other big players like Lockheed Martin, although they initially took a hit, they are slowly starting to rise back up. But overall, basically everything except for energy took a hit. And yeah, if we take a look at some specific things like U.S. crude oil spot, you can see that it has just absolutely spiked ever since the war started, and is now up about 50%, which is absolutely crazy. So now let's take a look at the outcomes of this war and what investors need to know. The two most likely outcomes for this are the quick resolution, where the strait reopens likely in 2 or 3 weeks, oil floods back into the market, prices collapse, growth rebounds, and stocks soar. But if the prolonged stalemate happens in Iran, where energy prices stay elevated, sticky inflation, growth slows, possible recession, and higher for longer rates. Now let's talk about how investors can be protected from this. The first thing is to maybe have some energy exposure. Oil majors, pipelines, energy ETFs have been the clear winner over the past, as I've shown you with XLE, but it is crucial to take profit on spikes, as you never know when the war is going to end. I would also avoid heavy leverage on rate cut bets right now, as all this oil news is looking like it may affect the Iran war in a negative way. If you want to, you can hedge with gold or defensive sectors, but even now, this has not worked out that much. As you can see, gold has been taking a hit recently, so in my opinion, it may be best just to stick with cash. But yeah, so this is just my tips for some of the investors regarding the conflict. In my personal opinion, I do think that the war will play out a little bit longer. I myself am looking into getting into some energy plays. One that I have been looking at recently is called Ale Anna, which actually produces energy for these countries that don't have it, such as in Asia or the UK, and it has absolutely spiked recently. I mean, if you want to take a look, ever since the war started, let's see, it has risen 200%. So although it may be a little bit overextended right now, I still think it will be very important if the war continues because of its importance. So yeah, guys, let me know what your opinions are on the Iran situation. What do you think will happen, and how do you think it will affect the markets? All right, thanks for watching, guys.